Hey everybody, it is currently Christmas in Canada. We're about 40 minutes away from the new day, but December 25th nonetheless, where I'm currently doing this broadcast, and it's a exclusive trading capital analysis on Ethereum, Ether, the fast-flying cryptocurrency, blockchain, smart-based contracts, high-yielding coin. And it is a hot commodity as we speak in and amongst the tech sector and investing community that pays attention to these speculative assets. Nonetheless, it has been an outperformer. So can't hate on ETH. It's one of my favorite long term. But what I'm currently seeing, people, is the fact that Ethereum has some bearish trends starting to form, in my opinion. Now, you don't want to get too ahead of yourself because cryptos can prove you wrong. They have before. However, you want to analyze everything objectively. And what I'm currently seeing in the patterns is a failed breakout. Okay, on the weekly basis. We'll get into the daily chart and then we can do a closer time frame. But the weekly basis, we have a failed breakout. So here you have your previous all-time high at around 43.76. And this candle, you closed above and made a new all-time high on a weekly basis. Then you proceeded to this candle. You floated all the way up, made a new all-time high, but you could not hold it. And then on the end of the week, you closed pretty much on the exact same day, but you never closed higher on a weekly basis. So you did not confirm above. Then down here, you completely sold off, had a big downside move, made a new low, and almost engulfed this candle. Actually, you did engulf this candle. And completely reverse that move. So you had a failed breakout on a weekly basis, and that's pretty powerful when you have a failed attempt. Often price has to retrace a great deal, and as you can already see, price retraced all the way to the 382 retrace level, the fib level, and it had a massive bounce, so much buy the dip strength waiting there. Look at this massive tail. That is huge, but ultimately we're going to be seeing, I think, larger bouts of selling volume down here as we're currently witnessing, and the volume is still extremely light in the overall markets, the stock markets, but I expect that to change in the new year as people and institutions come back from vacation. So on a weekly basis, we also have this trend line, this red faded trend line that connects you to the COVID lows going all the way up, and it's been, at times you've been far away from that trend line, which shows you the power and strength of the current cycle or weekly cycles here, and you can play those relatively well. I mean, you had an impulse move here, and then you could have easily played a few more of these moves on a weekly basis. So the weekly basis does give you a lot of insights, and that's why you kind of have to respect the long term. But now you've had a major pivot low here, which is almost a triple bottom in May, and you've actually started breaking this trend line here. And what's interesting is you've been saved. This red trend line has kept you in check for quite some time, almost since the COVID low. You haven't confirmed and broke it. And now this is the first week where you actually closed below. You've been saved, and now you're looking to confirm below. You're having a green candle that's trying to save it, but you got to be very careful with a downside move that confirms lower than this candle. So that's currently what I'm watching, and I am seeing a fight right now from the bulls and the bears, but ultimately you have triggered a bearish potential technical level, and if you get confirmation below, you could see a downside move. And since you've already seen a downside move to this 382 retrace, I reckon that it takes that level out very quickly because you've had support now tag that, and the price action hasn't been able to recover. So once you break that support, naturally you're going to have this 50-day on the weekly chart. However, I'm clocking in this pivot low or the range of this 50% Fibonacci retrace. So around this pivot low, the 26.65 to the 25.33, you could get a large waterfall sell-off, a candle like this. But then I do expect a bounce. And that's what we're going to get over the next 3 months. As not all the money will be removed at once, I do expect that there's those certain times of the month where the Federal Reserve actually buys assets into the market or from the market. So they actually make the direct asset purchases on certain days, and you can't really time it, but there are patterns as to what their history has shows of when they do make these asset purchases, which often correlates to sometimes, not all the time, but sometimes a uptrend in the markets. Very interesting. So I think these fib levels are going to be very interesting. I do suspect we go down. My guess is that we do have a bigger, larger correction at play. You have to remember the thesis and the tightening of monetary policy. This is a pretty bearish pattern here. You can't really argue with that. Ethereum needs to save itself quickly, because right now you're trading in between, on the daily chart, the 50-day and the 200-day moving averages. And often what's the case is this is going to obviously go to create a sine curve lower, and you're going to naturally come for support here by the 200 and this 382 fib level. But now that you're trading and you've broken it and you've confirmed below this, you're naturally going to find this level, and I suspect you're going to find it faster to the downside versus this rising up and catching the price action. I don't think we're going to have a neutral to sideways correction. I think we're going to have this price action come down to the 200-day relatively soon here and correct in a very vicious way, like crypto always does. So let's just see if we can observe anything in this price action. So the argument here is that you did have this breakout of this trend line, which most people caught, which is very interesting. And you had your impulse candle to the upside. And what you would have liked to see happen is a bullish consolidation. But we didn't get to really see that. This is starting to now become a little, not a clean bullish pattern. It could potentially still be saved, but it's not a nice, healthy setup that I'm currently witnessing. And before long, if it has another failed breakout above a trend line, that's just another bearish signal that, hey, probabilities here are not in favor of the trend holding up. Ultimately, let's go back to the weekly. I do think we see a larger correction at bay. Typically during an interest rate tightening, policy period, we've seen major sell-offs happen, and people always, the same argument is, oh no, the crypto industry is so established now. You know what it is, but money and psychology works the same way. In periods of downturn or tightening, things sell off. Look at this sell-off, 94%. That is atrocious. And you had major bounces along all the major fib levels. So the 618 would have been a nice one to time. Beautiful. Usually always is. You had the 50 or the 0.5. Beautiful one to time. And then look, the 786. A massive bounce. Boom. But ultimately, where'd you go? You went all the way to $82 here. 94% correction. If we were to correct 94% on this current cycle period from the top, it's going to scare people. It would scare people. Let's just say 94%. Okay. Let's just draw a trend line across. Oh my goodness. Technicals are so weird. That is crazy. If we were to collapse 94%, which mimics the previous correction in crypto, 94%, that would take us to this pivot high. How weird are technicals in crypto? And what is this previous high? That's the previous high before COVID. Okay, before the world went into shutdown and Ether hit its pretty much all-time lows here. So this was the COVID high. Basically, history is saying if the cycle repeats itself, then Ethereum will crash 94%, taking it back to the previous all-time high before all of this fiscal and monetary policy took place, that would be an incredible buying opportunity. Am I going to wait that long to buy Ethereum? No, definitely not. My plan is to be trading it on certain key levels here, and as I see price reverse. So these levels are really going to make a big difference in me swing trading it and what's going on. I think the opportunity is pretty much January, February. You're getting a little dicey in March because the liquidity is running out. And if this is all a big if they stay committed to their plan, I don't want to be trying to pick the bottom when interest rates hikes are on the actual board, and when it's actually been, the rate hikes have taken place and the liquidity is gone. If that happens, I don't want to be trying to pick the bottom of a market because all the dippers will be already gone. Let's just think about it. If we remove, for 22 months we've been printing 120 billion a month. Times that by 12, that's like 1.5 trillion. Times that by 2, that's basically 3 trillion. When we have a full year gone by with no artificial liquidity, and let me just say, I don't think we're going to be able to survive a full year without any artificial liquidity. I just think the system is boxed itself into a corner, and it's really looking bleak. Now there's always opportunities when you see the picture, but I'm telling you, it's not going to be pretty for certain asset classes. That being said, I'm looking to buy heavily at the 786 here, the 1183. But ultimately, you have to monitor the price action. This is a long way away. These are just general targets right now to keep an eye on. And it's very interesting that I just noticed this correlation between a 94% correction would bring you exactly back to the pivot high before the COVID crash, before the monetary fiscal policy took place, before all this artificial stimulus and liquidity. And frankly, that's what the markets need on an economic basis, is a major correction that completely negates bubbles. That would completely remove the bubble that basically Ethereum has created. And it correlates to the freaking T exactly with the previous correction only in 2018. A lot of people weren't around trading crypto in that year. That's actually when I started. And boy, oh boy, I remember making a little bit of money in this area here on the bounce, but holy, you watch out below. You think crypto's, you have a strong stomach. When cryptos just keep going down and down and down, and you have these huge exhaustion moves, but they just keep continuing, you think you're going to get a bounce. This is in the form of, still a policy period that was raising rates, but I think we're going to have to do it more aggressively because the Fed is trapped into a corner with too much inflation. The Democratic Party up for mid-election putting pressure on them to tighten, and the fact that unfortunately they need the free stimulus just as much as millions of citizens are going to be needing. On that note, I want you to trade Ethereum cautiously. If there's any setups in the shorter term that I'm looking for, let's just go over them right now. So yeah, I think you potentially get another bounce at this 200-day moving average. That could potentially be a play. But ultimately, you're going to be going to this 50% retrace, or this pivot low area. I think you slightly take out the low and then have a bounce back up. So in and around, this zone here, I'll just put a box. In and around this purple zone, I think is going to be a decent buy. That means price still has to correct a fair bit amount. And 37% price still has to correct. Often you have to have your orders lined up in crypto before the crash happens, because so many people have their orders spaced in at certain levels here before you have the chance to even buy. The crypto market is so automated, and the stock market is too, that you got to have your orders ready, because look how fast this falls. I mean, this red candle is huge. If you look at it, that is a 17% fall. And you have to remember, this is a 17% fall right off of the highs. History shows that the smallest falls happen right off the highs. Just let me repeat that. The smallest falls tend to happen right off the highs. The largest falls happen at the bottom of the pattern. That's why the fib levels are spaced out. The falls when you reach the end of the bear market are so bad because everyone's just beaten down, and you have those exhaustion waterfall sell-offs that people are like, just get me out of this position and let me move on. Put this out of my investment psyche. But you know what? Those are the ones you have to remember and learn from. I've been in some losing trades, and you win some, you lose some. That's why you have to position management and manage your risk. But that being said, I suspect ETH is definitely going down. You've confirmed below. You've broken the 50-day on the 200 on the daily chart, so you're definitely going down to the 200. And then from there, we'll have to reanalyze to make sure that the Fed hasn't released some new policy change that could affect their outlook or the market's outlook. Ultimately, if the Fed remains hawkish, then I am certainly on the short side of the market. Thank you, everybody. Hope you had a wonderful holiday and wonderful Christmas. Take care.